Joining me for this CEO Spotlight is Amy Tait, Chairman and CEO of Broadstone Real Estate. Amy, thanks so much for joining us.
Thank you, Matt.
Now, under the Broadstone umbrella, you oversee two private REITs, Broadstone Net Lease and Broadtree Residential. How would you describe the current investor reception for private REITs overall?
For private REITs, it's actually terrific. We are raising equity every month at a regular basis, as strong as we've ever had, and I don't expect that to change. We are private, Reg D, so only accredited investors, and they come to us directly. There's no broker-dealer and no broker-dealer commission involved. So some of them come to us directly, others come through their wealth advisors, and for Broadstone Net Lease, we'll raise a little under $300 million of equity this year. And for Broadtree Residential, our newer fund, we're starting to get some momentum. We'll probably raise about $60 million of equity this year.
Now, looking at Broadstone Net Lease specifically, the net lease sector was on a torrid acquisition pace not too long ago. How would you describe the current market as we head into 2017, and what expectations do you have?
Well, that's a great question. A lot has changed in the last week. There's been a lot of concern generally about interest rate increases, but frankly, for us, we're not that worried. We're back at interest rates that are about the same, actually a little bit lower than they were a year ago today. I think that the current interest rates were anticipated in the pricing. There's still a very positive spread between cap rates and current borrowing costs for us. So I feel pretty calm about cap rates and valuations in our industry. I think in the short term, maybe there could be some dislocation of some deals that got busted by buyers that were caught by surprise. But longer so, and then there might be a little bit of a settling out, but I think that we'll do very well in the coming year. Last year, we bought a little over $500 million of acquisitions in Broadstone Net Lease. We'll do maybe a little bit less this year. The year's not over yet. There's always December. And I think we'll have a similar pace or a little bit more next year.
And Broadtree Residential focuses on not only the single-family rental market, but also multifamily and other opportunistic housing-based properties. What trends are you seeing across that portfolio, and is there any sort of geographic trends that you're noticing?
You're right to ask about geography because it really all comes down to that. It's the markets are completely different across the country in the rental markets. Obviously, the coastal markets and the core city markets have had some really great rent increases and maybe got a little bit overheated. And there's maybe a little bit more overbuilding, new building going on that will slow things down a little bit. So we're kind of going back to our basics, and that's where we've always stayed. Our family, as you may know, was in home properties where our focus was on Class B residential suburban markets where there hasn't been a lot of new construction, where we're still buying well below replacement cost, and where rents are going up very favorably still. For our small company, we're primarily focused in the Atlanta market right now, and there, for example, we're getting mid to high single-digit rent increases at both our single-family homes and at our multifamily apartments. And in residential, we're still buying single-family homes, 3 bedrooms, 2 baths, quarter-acre lots, already renovated, already leased, at about $50 a square foot. $75,000 per house. So we're still buying well below replacement costs in a market that has great job growth. So we're pretty excited about Georgia. But with that, we plan to enter some new markets as well this year. So stay tuned.
And lastly, we've talked in the past about the important role that your father played in mentoring your career. What advice would you give to those that are just starting out in the real estate investment space as they start to launch their careers?
That's a great and a timely question, Matt. My dad's really been struggling health-wise the last couple of years, but we've worked together for over 30 years, and he's been just a phenomenal mentor to me and to many other people in our company. And while I've had the opportunity to work for others and learn some different styles, he's obviously been the biggest influence on me. And I would say to somebody starting out, having a good mentor is probably the most important thing. It doesn't matter if you're in a big city or a small city or working with a big name brand company or a smaller family business, but if you can go into work every day and work with somebody that is smart, that is honest, that is disciplined, that's hardworking, ethical, that's really going to help you grow as not only as a professional, but as a person too. And in the end, that's the most important thing.
Amy, thank you so much.
Thank you, Matt.
For more from REIT World 2016, be sure to visit REIT.com.